So Trader's Basic Toolkit, previous lessons, identifying levels, multiple time frame, three technical levels. We did trade plan, and we did some math on profit targets and profit targets with regards to your account size, not profit targets with regards to your trade so much. This lesson 6, impulse corrections, ABC, W's and M's, head and shoulders, and double bottoms. It's actually a lot. So I'm gonna make this more like an intro and just touch on some of these. And so when you hear some of this terminology, if you're in rooms with myself or Jamil, you know what we're talking about. And impulse and corrections, right? This is a 1-minute chart on the ES. So, you know, we say impulse and correction. What are we referring to? Well, this is an impulse move right here. Let's go here to here. This is a better example, right? So here's an impulse move. Might even look better on a 5. Looks great on a 5. So here's a long move down, but here's an impulse move up. This is a correction, and this is an impulse. So that's what we're referring to: impulse correction, impulse correction. Okay, another good example of this would be, see if we can find a really good-looking example of this. Impulse correction, impulse correction. This is a great spot right here. Okay. Here's an impulse move, impulse correction. Impulse correction. Impulse pretty correction. So impulse correction, impulse correction. This is a significant impulse right here. Now, you know, if you break this down to smaller time frames, yeah, for example, right here, you'll actually see here's an impulse right here. Here's a correction, and here's an impulse. And that's, you know, it's fractal. So, and I did, one of the lessons I did talk about the market being fractal, right? So here's a impulse and a correction. So this is an impulse and correction within an impulse. This is an impulse and a correction within an impulse. So when we say impulse corrections, that's what we're talking about. Okay. This right here on making a note on this ABC note I have over here on the right side. A lot of times, and you can see this here, okay, you got this move up. This is a retracement. Now, yes, I did just previously label this as a correction, but this is, you got this big move down here, this whole move down, okay? Now, if we were to look to the left, there's potentially, let's see, clearly there's something here. Well, I shouldn't say clearly. It's a little naive, but let's look. Right. So what was it that, you know, stopped the price here? And it was this daily demand level right here, this rally based drop. So this is a daily chart run right now. This date was somewhere around January 20th, and this bottom right here that I was talking about is somewhere around the 2nd. Let's run back over there real quick. Here it is. Okay. So you got this big move down. We hit this daily level down here. Price popped up. Okay, so there's your impulse. And this is a retracement. So we refer to this as a retracement because there's a level down here. You know, let's just say like you. Yeah. So that was a daily level down there. Price ripped into here, came up, comes back down and retraces that level. We get an impulse up here, correction, and an impulse. So this is what you ever hear me refer to an ABC. This is the A right here. This is the B. This is the A leg, the B leg, and the C leg. So A, B, C. Generally, a lot of times, these ABCs are going to be a 38%, Let me duplicate this for you so there's less crap on the screen. Okay. Get all this off for a second. So as you can see right here, we went right to this area, and this is never exact. Okay, as you can see, it's actually past that red line. So these red lines right here, if you can't see them, they are they're fib levels. And this one right here is 61.8%. This is 50%. And this is 38.2%. Okay, that's what those red lines are. So often there'll be an impulse followed by a correction. And this is a lot, in my experience, is a lot more common in, and this happens all over markets and different assets and whatever, but a lot of the patterns I'm going to share with you happen over and over again in the indexes, the YM, the NQ, the ES, over and over. So in this particular case, price came just below a 50% retracement and continued moving up. So ABC pattern, it's basic impulse. B is correction, C is the impulse. That's it when we're referring to the ABC. Okay. Up, down, up. I have a note here about W's and M's. All right, let me touch on W's and M's real quick. I'm going to copy this again because I'm probably going to end up tying all these together. Okay, W's and M's. Here's what I mean by W's and M's. You're going to find these W shapes at turning points in the market. Okay, so this is the market signaling a potential change in direction. It's also a higher low and a higher high. Okay, so price is moving down, 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 and you're looking for some indication that the downward move is over, or at least temporarily over, and maybe we're moving up. Well, in the case of demand levels, you're going to find these W shapes. So price comes down, comes up, comes down, comes up. So it's a higher low and a higher high, and now you have a W. What you will also find is price will have a tendency to come back and retrace that area where it put in that, let's call it, it put in that reversal. Okay, so you haven't missed the opportunity to join this change in direction and this upward move. So what you'll find is price will come back sometimes, and somewhere between 78 and 88% of that swing up is a place where price will. So here's the impulse. Okay. A different color here. Excuse me a second. Need something dark. Let's try that. That's too dark. So just to get it out of the way of the W, there's the big move up. Okay, well, if you want to join this without suddenly just hitting the buy button right here, how do you get in? Well, you want price to come back to the point at which this reversal started. And what you'll find a lot of times is that somewhere between 78 and 88%, somewhere in between here, is where price will retrace, come back, and keep moving up. Now, ideally, what you want to do is not just take that 78 or 88.6% retracement blindly. You want to try and line that up with a level. Now, if you know how to draw your levels, maybe you can find something in here. Now, aside from the higher low and the higher high, I don't have at least the structure that I like to see in a level here. Now, there might, however, be a level in here on a smaller time frame. So I go down to 1 minute. We'll go back over here. What we see right here. There's a 1 minute rally base rally. actually a drop base rally, rally base rally. There's the drop base rally right below it. And here's the rally base rally. So what you're getting is you're just in this particular case, you're stacking confluences. You have a higher low and a higher high on your 5-minute chart because this came off a 5-minute chart. You have a higher low and a higher high. You have a 1-minute drop base rally, rally base rally right here. And if you're on your 5-minute chart, you have this impulse move up and this retracement that lines up with your 78 and your 88%, with regards to how far down is it retracing. Now, mind you, you also have you got something that looks like a rally base rally right here, to which you would say, well, why did price rip through there? There's a lot more to it. It's maybe a whole other lesson, but if you're looking after a big move down for price to come back and you're trying to line up, now perhaps, perhaps if these levels weren't here, I might be more inclined to say, all right, here's a rally base rally here. There's some buyers in here, and this would then potentially maybe this ends up being a different pattern. Maybe instead of being this retracement to the 78, 88% and those levels down below, maybe this comes to here and moves up off of here. Now, that's possible. And why this one instead of this one? There's not really a clear answer to that. Your strategy may not actually allow you to take this, or allow, maybe not the word. You just don't have any strategy that you take these levels. You don't take 68% retracements. You don't take, for whatever your reason, you want price to go lower. I don't know your strategy. I can't see everybody's strategy, or what they do and don't see in trading, for whatever the reason. Sometimes this works, sometimes this works. You may watch price hit here and keep going up and never come down here, and maybe you had an order here. Well, worked on Tuesday. Well, why didn't it work on Wednesday? Because that's the way the market is. So I'm just kind of like an intro to patterns that you will see often. Okay, so in this case, this happened to come all the way down here, and ideally, you want to be taking trades inside of levels. This is a level, this is a level, this is a level. So actually, you put this trade on, and if you get stopped out, you can say, this is my backup trade. This is my next entry. If this works, I'm in it. It goes great. This doesn't work, I get in here, and this one goes, which is the case of what happened here. Okay, so this is W's. What is the M I'm referring to? The M just happens in supply zones, just opposite. What we're talking about in demand, right? So an example of that would be something like this. Here's a 5-minute chart. Here's a big move up. Price comes down. Price comes up. Price comes down. What do you have there? There's your letter M. Here, 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 here. And the M is just a reference also to a lower high, which would be right here, and a lower low right here. So your 5-minute chart is starting to telegraph at this point, starting to telegraph its reversal to the downside. Moves up, can't go higher. This is your lower high. Sorry. Comes down, 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 down. You now have a lower low right there. Oh, don't know what just happened there. Okay. And there's your lower low right there. Well, so that's the M I'm referring to. Even make it look more like an M like that. So this move from here to this top here, just for the sake of making it look more like a letter. That's what you got right there. Okay. So M, another place you're signaling a reversal. I don't know if, let's see if this actually, became something, a place where price came back to. Price didn't even get back to there. Would this be a high probability place to be short if price comes back there? Yes. How far will you take that trade? Like, how much will it drop for you? That's going to depend on, what price does with regards to, does it change trend here before it gets up there? And then, what are higher time frames doing? So, W's and M's, if you're looking for reversal points. Now, can you use that to your advantage in a smaller time frame if you're day trading? Well, see if we can find an example of that. Here's one right here: higher low, higher high. That would be your W. Now, is this morning? I believe this is this morning. Okay. So here, 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 here. Okay, price comes back there. If you want, you can wrap this whole area. It's just, again, another way to identify a level. You say everything between this higher low and breaking this pivot right here. When I say breaking this pivot, I'm referring to this right here. Okay, you can use this whole area if you want. You know, what you need to decide is, would you be willing to get in at 38.25, which is the top of this area, with a stop down here at 0.8? Probably not. It's a lot of risk. You could then, again, you can use you can work your way in with the micros, or you find, you know, you do some back testing, you stare at many charts, and you try to find a pattern in these candles that resonates with you, that makes sense with you, that tells you that somewhere in here, when you see a certain pattern, that it's time for you to, that you think that this is going to hold, and it's time for you to get long here. Okay, I'm not going to get too deep into that at the moment. But as you can see, this area held. So it's just a matter of how you figure you're going to get into that. Which would lead to another pattern. So there's another reversal that I like to trade. I'm only going to get into the shape right now. I'm not going to get into the measurements, because you can also, you know, the trade also exists. Sorry, the pattern exists without the measurements as well. I'm just going to show you what the pattern looks like. So there's a pattern called Head and Shoulders. You probably heard of it. It's pretty common. And I can tell you it's quite common in the indexes again. Okay, so it's usually at the top. Well, it's at the top of a move because it's a reversal, right? So what it looks like is, it looks like this. Now, for reference, if you using this blue line going through here, it's a 50 moving average, just using that as a reference point to identify these swings. In this case, you got a big move up, price swings down, passes this moving average. So you don't have to use the moving average. Okay. Again, this is just for demonstration purposes. Let me take this out. Okay. Price moves up, down, and eventually that down, even though you had this correction right here, the bigger move eventually, because this is a reversal, is down. Okay. In this case, it was very down. So this is called a head and shoulders pattern. Okay. I usually will head and shoulders, if I'm ever talking about it, I'll usually note it on my chart like that. You get the same pattern, and this is shoulder right here. So anyways, talking about head and shoulders pattern, this is what they're referring to. Now, what a lot of people, I believe, a lot of people do is they trade the break of this. This is referred to as the neckline right here. They trade the break of this neckline. Okay, so price comes down, it goes past this pivot low, and then they find a way into the trade. Okay, when you're breaking this right here. Yeah, you know, there's more than one way to trade this. I'm just making you aware of it. I usually take this trade somewhere up in here, but there's a longer lesson involved in teaching that. So I'm just trying to make you aware that these patterns exist and these turning points exist. And what you'll find a lot of is, let me see where that just disappeared to. What you'll find is, if these patterns are present at these turning points, then price will return to them and move off of them. And this is a great example right here. This was the area we were talking about before. Okay. Now, the head and shoulders was in here. I just didn't show it to you because I didn't want to get ahead of the game, but we're going to put in 2 more lines and it's going to be very visible. Okay. Here is your impulse move down, a big move down, and now price is starting to reverse. Okay. So we move up, we move down again, we make a lower low. We move up, but when we come back, we don't make a lower low again. We don't go lower than this low. So this right here is this is an inverse head and shoulders. Okay. It's the same pattern, it's just upside down, which I usually label like this. If I label it, or if I'm texting somebody about it or whatever, inverse head and shoulders. This being your head right here. And this being your shoulder right here. That's a shoulder there, and this is a shoulder here. That's a reversal. Now, price reversed. What else do you get? Well, like I said, price often will retrace somewhere into the middle of that reversal pattern, in which case it did right here. I say the middle of the reversal pattern. You might also remember before I said, I'm throwing a whole bunch of stuff at you, but if this is your higher low and this is your higher high, as you move up here, you make your higher high over here, right? Well, this pivot, excuse me for 2 seconds, somebody's blowing up my phone. You know what, they can wait. This whole area, like I had said before, you could just label this whole area where you have the higher low and you move through and you make a higher high, right? So I'm talking about the W area. If you label the whole W area as a demand zone, you then just need to figure out where in this demand zone are you going to get long. Okay. Now, again, that's another lesson. This is a 5-minute chart, so this ends up being a pretty big area from 32 down to almost, let's see, 25 to 32. Okay, like 18 points. So 17 points, whatever. You get my point. That's a lot of point. That's a lot of risk on the ES at $50 a point. Now, I'm showing this to you on a 5-minute chart, but this exists everywhere. Okay. We go down to a 30-second chart. Will we see some of these same things? Let's see. Yeah, you can see that. You can see the shape. Now, I do this based on measurements, so this won't necessarily measure out for me the way I want it to, but I can tell you, you can see that the shape is here. All right, so here's your shoulder, here's your head, here's your shoulder, and price is gone. Okay. Now, before price actually really made that bigger move down, you had to take a little heat here. Price came up, came down, came up, came down, came up, came down. Okay. But I'm just putting this in play here to just give you some examples. So this is a much smaller time frame. Okay, this is on a 30-second. Okay, there's your W. We went through that one before. Okay. Inverse head and shoulders, kind of have one right here. Okay. So here's a big move down, big move in the context of this time frame. Okay, move up, move down. Now, in this case, it actually came down and touched the same spot again. So I use this since I'm not going into the details of here's your shoulder, here's your head, here's your shoulder, there's your move away. So it exists everywhere. Whether you take it or play it, you need more context. My point is to just show you again that these patterns exist. And there's one more, which we're talking about confluence is referred to as, so here's the W I referred to. This is confluence all over the place here, right? So there's another pattern referred to as a double bottom. Okay. Double bottom is kind of it's exactly what it sounds like. Price comes down, hits a low, comes down again, hits a low, and goes up. It just twice to the bottom, basically. From a measured move perspective, my double bottom will usually come down and hit that 78, 88% retracement, which is those two purple lines right there. And if it closes above there and starts to move away, for me, that's a signal that I want to be long. Again, there's more detail to it, but it usually comes after a big move down. Here's a big move down. Cool. Let me give us another color real quick. Big move down. Okay, we're going to move up. We're going to move down. We hold the bottom and we keep going. Okay. And that would be that double bottom pattern. There are some measurements that go along with it, and there are some better examples in there as well. Let's see if I can find you one real quick. 5 minutes. One more. Come on, where are we? All right, just gonna go randomly into the middle of the chart here. And that's news. So that's gonna be messy. 9 a.m., 2 a.m. 11 a.m. Hang in there, I'm looking for something very specific. And here it is. Okay, so this is a big move up. So this is a reversal pattern that measures out, right? Here's a big move up. Price comes down, price comes up. Price comes down. Comes up one more time. Click there. Okay. So when I'm referring to a double top, I'm actually referring to, this is the only pattern with measurements that I'm going to show you. And again, I'm not going to get into too much detail about it. I will another time, because these patterns exist, and sometimes they exist just in shape, and sometimes they exist with confirmed measurements. This is one of those cases where it's existing with confirmed measurements. So this is, for me, a double top that, this was probably news right here, 3 a.m. Oh no, that was was right around the London Open. Ignore the time of day for a moment. The pattern is here. Okay. And the pattern goes like this. The pattern goes, price moves up, comes down, comes back up. When it comes back up, here's from the high to the low. Right there. Price made a 78, somewhere between 78 and 88% retracement. Okay, didn't clear the top. Cool. When it comes back down, the next swing, so follow the yellow lines, the next swing goes somewhere between a 113 and a 127 extension. We say extension because it's extending past the previous swing. Okay. And then the final portion of the pattern is price comes back and either makes a 38, a 50, or a 61.8. One of them, two of them, or three of them hits there and then continues down. And I'm not going to get into the details of this right here. Just trust me for a moment that it either then, after it goes here, it either goes to this blue line or to this blue line. And in this case, we got all the way down to here. Now, what you'll also notice is, a lot of these moves are lining up with, I want to say lining up with levels, but this isn't the overnight, so really it's a messy proposition. There is a level here, this rally-based rally here, right in here that was hit once, and I believe in the case of this, was hit again over here and pushed back up, but eventually it took that out and went down. Went very far down. So this pattern, and I know that's messing with all those lines, is what I would refer to as a double top, just right in here. So the key to this pattern would be getting short in this what I would refer to as a C point, because this pattern has an XY leg, which from down here up to here is why. Again, I'm not going to go into details. I just want to introduce you to the fact that these patterns exist and that they happen quite often, and they create trading opportunities. And the opportunities are even stronger when you line those opportunities up with levels. So here in this particular situation, we'd have to probably go into a 1-minute chart to see if there's levels here. This was a case of the pattern existing in measurement. It may not be the case of the pattern existing because it's also hitting levels. So let me take a look real quick. I should check the date on that before I clicked off it, but I think there it is. So in this case, here's a rally-based drop on a 1 minute. It's really ugly because we're looking at this. This is overnight stuff, but that is a rally-based drop right there. Rally-based, price moves down, rally-based drop. And then the C points I was referring to, there's a drop with a gap right there. So that's a drop-based drop. I'm really reaching on this one, but just looking to see if there's levels that line up with this pattern. You definitely, these patterns are definitely stronger when there's levels lining up with them. So you can find the spot somewhere within the pattern where you want to be a part of it. Or in this case, were you looking at this now? This is a 1 minute chart, at 10 o'clock at night over here. If you're looking at this, yeah, you may say that there's a rally-based drop and a drop-based drop. But if you're looking for a C point in here, you're actually looking for a level to be short of, because you think that based on this, seeing this first thing, lower high, lower low, also the M, also the double top. So just a whole bunch of confluence, a whole bunch of ways to see it. If you're looking for this point over here, which you want to get short, you might look at this and say, there's really nothing here that I would qualify as a level. Therefore, I'm not going to try and take any trade over here. So you don't take any trade here. I mean, it's that simple. So that is a brief intro to patterns. I will in the future get a little more, I will get more deep into those patterns. So I got on that for now.
All right.
You
Well,
got
thank you. This
you
was
got
very
any?
helpful.
Yeah, feel free to ask any questions while you got me.
Um, I don't have any at the moment. I'm going to look at this on the playback, just to digest it a little bit more. But this was very helpful. I did take I did see a lot of benefit in the math portion that we did in lesson 5. That was very helpful as well. Lesson 6, I'm going to have to continue building on, but this was good to visually see everything, and how to, look for
Okay.
these patterns.
Yeah, I'd say the simplest place to kind of note patterns, even for starters, forget about the double bottom, the head and shoulders. This whole W and M thing, really nice and simplified, and if you start to look for it, you'll see it.
Okay.
It's just a higher low and a higher high, which is telling you that there's a change in there's potentially a change in the move that precedes it, or it's the end of the downward move in this case, and going in the other direction, the end of an upward move. And that might be temporary, that might be long term. It depends on a whole bunch of other factors, like you near 60-minute time frames, or you near 1 hour time frames. Like so today, if you saw this today, this was 8:45 Eastern, and price came back here at the open, then now I wasn't here for the open, but if we look at this real quick, price came back here for the open. 1 minute chart, higher low right there, came back up, and once we took out of there, took off out of there, it was gone. This was also, you have a higher low and a higher high on 1 minute and a 5 minute. So if you would potentially maybe watched price bounce around here, and you saw this hit this 88, it didn't actually close above it. Like if my rule was going to be, and I do trade this, that I'm going to take this 88, I want to see price close above it. In this case, price didn't close above it. That's my rule, right there where I have my crosshairs. It actually closed below there. All right. But yeah, the W's and the M's. Keep your eyes on the W's and the M's.
All right.
Cool. Anything else?
No, that's I got a lot of homework to do.
Oh man, cutting in and out, and I have a feeling it's not you cutting in and out. I think that's something to do with my computer, and I don't know what it is because it's not the first time I've heard it.
Oh, okay.
And my computer's
All right, but
new-ish, so should not really be an issue.
no, but this was very helpful.
All right, cool, man. Feel free to shoot me any questions, or if you got something maybe in mind that would be helpful as a topic, maybe I can work through it on another day.
Okay. Thank you.
All right, I'm gonna get out of here.
All right. Bye.
Wait a minute, have a good one.
You too.